Good morning. Today we're going to take a look at XRP and the Sigma coin. So starting with XRP, we're going to be jumping over between the current price action and the market cap chart. So to kind of reiterate where we are in the overall market, let's just look at Bitcoin for just a moment here. So Bitcoin has a ABC up structure that we've been monitoring now for quite a while. And we're getting ready to do a partner leg to the downside, which will take the entire market lower with what we have going on. So we did an ABC down, then we ended up setting a lower low, and then this resulted in an ABC back up again. And now we're going to have one more ABC for a partner leg to complete what we have, taking us into probably the end of September. And then we should be able to get out of here and finally move higher. Now, in validation for this idea on Bitcoin is if we start seeing newer closings up above this region. So you can see on the 1 hour, we wicked up into this area above the measured move of 1, which was this measured move right here, this leg A and B. And then we ended up getting a equal measured move into here. Now, if we start closing up in here and we start seeing higher, well, then we'll abandon this partner leg to the downside. But right now, this partner leg is the expectation going lower. So how low exactly we'll get to later points, but that's the idea. Now, XRP, on the other hand, has been doing very well in this correction, working off of its wave 1. So as we look at a less choppy kind of area here, we have a 5-wave move to the upside, and we're getting ready to complete everything before we go in and do another corrective structure on XRP for a back test into these regions. Great impulse off the lows, and we have 1, 2, 3, 4, and 5. Now, using the trend-based fib tools on here, you can see that the identification of wave 3 and this wick and stuff kind of throws everything off on the USD pairing, and we didn't quite hit a 1618 measured move on the price action that quickly. So we're going to actually look over here on the market cap chart. So on the market cap chart, if we measure the completion of wave 1, 2, and we move here, notice that when we line these up appropriately, we actually hit the 1618 on the wave 3 move, where we didn't hit it on the market cap chart. And this is because the dollar itself has been flopping all over the place. So the dollar ultimately over the last month, well, just for a long time, has been continually chopping, and this chop has been manipulating the USD chart, making it so that targets that we would normally expect to hit are not being hit due to the dollar's breakdown that we're seeing. So that being said, now we're jumping back to the market cap chart, and you can see that this measured wave 1, 2, 3, 4, 5 is playing out nicely with a 1618 tag. And I would want to point out these two areas of interest here recently. So this one was way back when we started this journey. You can actually see that on the USD price, we set a lower low right here, okay? But on the market cap chart, we set a higher low. So this was the identification of a completion, starting of the wave 1 impulse that was skewing the structure because people saw the lower low being set, thinking that we had another wave lower. Here, you can see that when we zoom in on this price action here in the middle, we ended up doing a 5-wave move to the downside with a lower low being recognized here, offsetting our count for the whole thing. But when we bounce to the market cap chart and we zoom into that same area, we have a higher low. And this actually completed our wave 1, 2, 3, 4, 5 for the completion of wave 3 off of this move that otherwise wouldn't have been identified. So then we have a rejection of the 1618, a wave 4 correction, and now we're being impulsively working our way up to the final 5th that should be playing out here. So this is why we're looking at the market cap chart, because of the technical tags on the market cap percentages, coupled with the deviations being clearer on the market cap. Now, how do we determine what we have for this 5th leg? Well, wave 1 and wave 5 should be the same if we're having an extended 3rd, which we did, right? So we have this wave 3. So when we pull this up, we're actually going to be using the same fib-based trend tool, and we're going to be measuring the equivalent of wave 1 and the equivalent of wave 5. And right now, from our low that we ended up having right there on that back test, we should see a 240% for this wave 5 to equal wave 1. So what we did is we measured wave 1, we came to the bottom of wave 4, and we get the same measurement for wave 5, giving us this level right here. We got to infer this percentage based off of the expectation of where so we've got to look at the percentage, and we got to infer it on the USD price based off of percentages. So from the low, basically, we have a 2.4% increase in price action. So from this wick down, we should expect a 2.4% increase off of price action. I think we're going to actually have to go with the candle close. Actually, let's do it from the high. So from the high, we end up getting because this is delayed by 20 minutes. So we have a 1.3% increase in the price action. So from the high that we have here, we end up having a 1.3% increase in the price action. So you can expect that we would probably be seeing about 323 for the top of the final fifth wave move for what we have. And notice, yet again, this would be short on the overall market cap price from what we would expect between where we would normally tag, which would be a 2,618 measured move by 2%. So everyone's waiting for this price target, and then blah, and just rolls over on itself. So point being here is, as you're getting to the end of the move, a lot of people will be taking profits in here and here and here. This is what's happening now, is that we have a profit taking, a distribution happening. So you can stretch for this ultimate higher level, but what you're really ultimately trying to do is mitigate risk, as with measurements, estimating on where you think price action is going to take us based off of the high that we know is in, which did tag a wonderful, look at that, 786 perfect tag back test to the 618 before completing its final fifth wave of a 1, 2, 3, 4, 5, because we're going to have 5 waves within wave 3, or wave 5, I'm sorry. So 1, 2, 3, 4, and 5. So that's how we should ultimately see this price action play. We've got a 1.32%-ish, 1.4% maybe. From the 1.3 from that level. So we should be expecting that this will probably take us up to about $3.23, which checks with the supply that we'd be getting back up to in this gap close. Looking at the liquidity, now that we end up knowing kind of where the measurements are, liquidity says we have one more test up to 319, maybe into the 320, 323 range. And if we go back to our USD price, that also confirms that we should have one more squeeze up to 323. Again, liquidity showing us that 323 is an area of supply that we could probably expect. So this should ultimately kind of work its way up, get that final fifth wave in, move it, and that's how you measure these moves. But primarily, we're going to be using the market cap to do so, because the market cap has been extremely reactive upon these fibs that we've been playing. Then we'll start doing measurements for where we expect our correction to come back down to for a wave 2 level. And then once that's all done and we've completed this next move over the following weeks to a month or so, we should have a really great October, November, December for the next move to the upside. Now jumping into Sigma, just kind of what's all this price action doing? Well, we ended up moving up to the upside. As of right now, I'm anticipating that this looks to me like a flat. So we would have a larger flat structure, but we all know that these things can change, obviously, with these low market cap coins. So I'm kind of looking at this as a ABC down, ABC up, 1, 2, 3, 4, and we'll probably have one more little low to like right there, and that would complete a wave 2 flat into this demand supply, and then we can continue our march out of here for Sigma, which would actually match with our breakdown expectations here, where you get a little bit of a kind of a flat off the lows right in this region right here, or even this one, so this is kind of the estimation of where we are right now. So but as far as Sigma is concerned, we're just looking at the 4-hour RSI still completely underdone on the Stotch, so it's getting ready to move to the upside, and the 3-day is also still looking extremely bullish for Sigma. Same targets still apply, that if we were to get a move from here to the upside, and we, let's say, get back into supply like right there, you get a 300 to 400% move to the upside. So Tuan yesterday was talking about how you buy a coin, you get a 300 to 400% move, you take out your initials and some profit, and then this coin ends up falling back down for a back test and hitting this area, then you would be looking at the ability to just take half of your position, put it back in again, because you'd have a 50% fall from what you took out, and you would actually have the same amount of coins that you had before without having to put any new capital into the trade. So right there, see? So you could play this, play that, and go from there, and you can see how on Cardano similar things happen. So once we get this kind of breakout, there's this move that backtests into supply, and this move is where people reaccumulate, get more of the coin, and are able to then return their overall investment by having more of it, and then they can move and continue marching out as the breakout continues and happens. So ultimately that's the trick right now. So we will be watching price action at 323, which would be a 1.36% from the high that we have here. Actually, let's move it right. Let's get it right on top of there. Bam. Okay, so we're gonna just guesstimating 323. Yep, 323 looks good. Then we go over here. We say, okay, what percentage move do we have? We have a 1.32. What percentage move do we have? We have a 1.36. So maybe, somewhere in that zone. And then you have our liquidation heat map that shows that 323 does have liquidity right up in there. So 323. So the expectation is one more squeeze, finishing out this fifth based off the market cap, giving everything in its opportunity to continue higher, and we just go from there. So hopefully that's helpful, and that's kind of how I'm shifting some of my views because of the market cap giving us much clearer defined fib levels, extensions, and measurements. So all right, thanks so much for watching, and we'll check in tomorrow.